I think at some point, gold will be reincorporated as money, not just in the way I described with the mBridge settlement idea, but actually either pegged or backed for a certain percentage based on the money supply of a certain country. Okay, so if you go back to pre-World War II, the gold backing of the US dollar or the gold backing of the British pound was anywhere between 20 and 40% of their money supply. So it's not 100%, it's never 100% backing. You don't need that. But even at 20% or 40% backing, in today's world, the gold price will have to be much, much higher to do a full backing. Like lots of people have done calculations, it's anywhere between $10,000 and $40,000 an ounce.
Moments like this remind us that markets don't move in a vacuum. Currency trends, monetary policy, and geopolitical realignments all collide in ways that shape the path of gold and silver. When the dollar weakens and deficits soar, investors naturally seek refuge in assets that hold their value across generations. And history has shown, time and again, that when faith in paper systems falters, hard assets rise to the surface as the true measure of wealth. Few voices have been as consistent in pointing to this reality as Frank Giustra. The Canadian businessman and philanthropist is not just an investor with decades of experience in resource markets. He has been a vocal advocate of gold's central role in the next chapter of the global monetary system. His conviction isn't based on theory alone, but on a careful reading of the signals: relentless central bank accumulation, the fracturing of the US-led financial order, and the rise of alternative payment systems beyond the dollar. What Giustra and others see is not merely a bullish cycle, but the early stages of a structural re-rating of gold. At current levels, bullion reflects concern, but not yet panic, about fiscal sustainability and currency credibility. If those concerns deepen, if deficits keep expanding and alternative systems gain traction, the demand for gold could push valuations to heights that only a few years ago would have seemed unthinkable. For precious metals investors, that possibility is both an opportunity and a warning. Opportunity, because it validates long-term positioning in gold and silver. Warning, because it means the monetary backdrop that has underpinned decades of policy may not survive intact. And if the world does indeed move toward a multipolar financial system where gold again plays a settlement role, the implications extend far beyond price charts. They reshape the very architecture of global finance. In this video, Giustra explains why he believes this transition is not only inevitable, but already underway, with projects like mBridge gaining traction and gold serving as the ultimate neutral anchor. Stay tuned, because what he outlines sheds light on why official buyers, sovereign reserves, and even digital settlement platforms are converging toward one thing: more demand for physical gold. If you haven't already, make sure to like this video and subscribe. We appreciate the support and hope you enjoy the video.
Gold has risen like you predicted. Geopolitical hotspots have risen like you predicted. Is the world progressing in 2025 the way you expected to when you made these calls in 2024?
Yes, it is. And specifically with gold, I think gold has surprised many people how much it's risen just in the last couple of years, almost nonstop. Now, I've been predicting a much higher gold price, and I still do. I still think we're in the beginnings of what's going to be a very long-term gold market for a whole number of reasons. It's going to be very different than what we experienced in 1971, what we experienced in 2009, what we experienced in 2020. I think we're going to go through a transition of the global monetary system where gold is playing a central role. That's happening.
Okay. $3,600 gold, what does that signal to you?
It signals a loss of faith in fiat currencies. I think globally, and especially in the West, fiat currencies are in their death throes. We need a reset here. There's just too much debt in the system, and there's been too much money printed, and these deficits keep on going and going as far as the eye can see. I don't know if you saw the CBO, Congressional Budget Office forecast the other day. They're saying that U.S. debt's going to hit $150 trillion by 2055. I mean, just think about that number. It's insane. It's at $37 trillion now. So I think that there's a reset coming, much like the reset that happened in 1945. So I think it's going to be that type of dynamic that's going to play out And whether it plays out smoothly or with a tremendous amount of turmoil is yet to be seen, because I'm not, you've got the world's bifurcated now into two camps. You've got the Western-led camp and you got the China-led BRICS camp. And they're competing. They're going to have different global financial systems. The China-led initiative is creating an exact mirror system to the entire Western financial system, including payment, settlement, depository, currency swaps, development banks, you name it, they're doing it all. And it all sits outside the US dollar system. So I think that is happening. A lot of people still don't believe it, but I think a lot more people are believing it today than when I was talking about it 3-4 years ago. And it's nice to no longer be a fringe lunatic player, because all I heard when I debated this topic starting 5 years ago, actually, was it'll never happen. And they used the TINA excuse. There is no alternative to the dollar. That's what everybody believed. Where are they going to run to? How are they going to do this? Well, it's happening right in front of your eyes with the mBridge project, which I'm sure you're familiar with. Would you like me to describe the mBridge project?
Please go ahead.
Because mBridge was a pilot project set up by China, Hong Kong, UAE, and Thailand starting about 5 years ago. And it's a central bank digital currency settlement arrangement between countries. And so the basic principles is that everything is settled with a central bank digital currency that represents that country's local currency and bypassing the US dollar completely. Okay. And now Saudi Arabia's joined. There are 27 countries that are observing the mBridge system. And that's meant to basically replace SWIFT and everything that's US dollar based. The Western system is going to, as far as the BRICS are concerned, and they're trying to enlist all the global South into this system to compete, to be completely outside the US dollar system. The additional feature, which is what I predicted 5 years ago, is that gold was going to play a role. I wasn't quite sure how, but I suggested that when countries have bilateral trade agreements and they want to trade outside the US dollar system, because most global trade has been done in US dollars, as you might know. But if they want to trade outside that system with local currencies, even if they're digital currencies, one country is going to end up with a surplus and one country with a deficit. Trade surplus, trade deficit. So the argument against this type of system working was, why would anybody use a system where they're going to end up with a whole bunch of unwanted currency? And I'll give you an example. Let's say Saudi Arabia is trading with China oil for other goods. And at the end of a period, there is a yuan surplus that Saudi Arabia has because they've sold more oil than they've bought goods from China. What are they going to do with all of those unwanted yuans? And I suggested a number of years ago that the solution was to net settle those deficits with gold. It was an idea. It's exactly what's happening. I don't know if you saw that China just announced they've created a deposit, a vault in Hong Kong to store physical gold so that now you can go to sell your yuan, exchange your yuans on the Shanghai Gold Exchange for physical gold. And then if you want to take delivery, it's going to be sitting in a vault in Hong Kong. And they're talking about setting up these vaults in other countries. I think next is going to be Saudi Arabia. And I would imagine they'll do one in Latin America somewhere. And that addresses the problem of the unwanted currency. And that's why China, in my opinion, has been buying a lot more gold than they've disclosed. As I've been saying for years and years and years, what China discloses as their official reserves of gold is not what they have. Because you just have to look at the physical flows. Their mine production, which they're not allowed to export. They're the largest gold miners in the world. They're the largest importers of gold around the world. And it just didn't make sense that they only had 2,300 tons of gold in their official reserves. And I've been saying that forever. Goldman Sachs just came out with a report last month suggesting that they may have up to 10 times more gold than they've officially reported.
Yeah.
And that's plausible. I could believe it could be that amount.
What you've just heard is a stark reminder that the debate over the dollar's supremacy is no longer hypothetical. Parallel systems are being built, and gold is increasingly written into their foundations. For years, skeptics dismissed the idea that settlement frameworks would move outside the U.S. orbit. Today, we can see it happening in real time, and the numbers confirm it. Physical demand is surging, and key economies are putting real infrastructure in place to bypass dollar rails. Adding to this complexity is what's been happening quietly within the United States itself. Customs data and industry trackers flagged unusually large imports of physical bullion into U.S. vaults in late 2024 and early 2025. The tonnage was significant enough to raise questions about whether this was purely institutional repositioning or whether elements of it had official sponsorship. Nobody has offered a definitive answer, but the timing, just as deficits were ballooning and foreign buyers were pulling back from treasuries, has left seasoned observers wondering if gold is playing a more strategic role than Washington admits. Complicating matters further, Russian officials have gone so far as to allege that the U.S. could be using gold and digital assets to engineer a hidden restructuring of its debt. That's more political accusation than proven fact, but it highlights how adversaries frame the issue. America is running out of willing creditors, and unconventional means may soon be deployed to finance trillions in rollovers and new deficits. Whether or not you buy that narrative, the mere existence of such claims underscores the strategic weight now attached to gold, not just as a hedge, but as a tool of statecraft.
I don't think the world is ready yet. I think that'll be a work in progress. I think you're going to have a number of hodgepodge methods of bypassing the U.S. dollar, including mBridge.
Yeah.
And, but eventually, I think, because you just look at the amount of gold that every foreign central bank is buying, it's every year they're buying, 1,000 tons, 1,000 tons, 1,000 tons of gold. And that's what has driven the gold price up the last 2-3 years. It's been central bank buying, and they're buying it for a reason. They're diversifying out of U.S. dollars to the point now where gold is a larger holding than U.S. dollars in all foreign central banks.
Yeah.
So we've seen that, and that's going to continue. And I think at some point, gold will be reincorporated as money, not just in the way I described with the mBridge settlement idea, but actually either pegged or backed for a certain percentage based on the money supply of a certain country. Okay, so if you go back to pre-World War II, the gold backing of the U.S. dollar or the gold backing of the British pound was anywhere between 20 and 40% of their money supply. So it's not 100%. It's never 100% backing. You don't need that. But even at 20% or 40% backing, in today's world, the gold price will have to be much, much higher to do a full backing. Like lots of people have done calculations. It's anywhere between $10,000 and $40,000 an ounce, which may sound crazy, right? But that's what it would take to do a backing of 20 to 40% of, say, China's money supply or America's money supply. All I know is that in the first 4.5 months of this year, of 2025, an insane amount of physical gold came into the U.S. starting last December.
Yeah.
I can't remember how many tons it was, but it was an insane number, and no one's quite sure where that went. It could have gone to the bullion banks. It could have gone to institutions, but it was such a large amount that it felt government sponsored somehow to me. Now, again, I don't know, but no one's ever answered that question. But I think everybody that understands what's going on out there is preparing, better have their gold in their own territory, which you've seen all this repatriation of gold from London vaults and New York vaults to countries in Eastern Europe. Okay? People want it in their own territory for a reason.
Did you see that? I'll show you a bit of this. The Russians accused the U.S. of using stablecoins and crypto to devalue the dollar and wipe out their $35 trillion of debt.
Америка прямо сейчас пытается поменять правила на рынке золота и криптовалют. Вспомните, какой у них долг. 35 триллионов долларов. В общем-то, это два альтернативных валютному сегменту мировых рынка. Действия Вашингтона в этом направлении отчетливо демонстрируют одну из главных американских задач. Они очень хотят решить проблему снижения доверия к доллару. США, как это было и в 30-е, и в 70-е годы, будут решать свои финансовые проблемы за счет всего мира, загоняя всех куда? В криптовалютное облако. Со временем, когда часть госдолга США будет размещена в стейблкоинах, США обесценит этот долг. Еще раз простыми словами, у них сейчас валютный 35-триллионный долг, они его загоняют в крипту, в облако, обесценивают и начинают с нуля. Это для тех, кто очень любит заниматься криптой.
My reaction is that it's exactly what I thought before they said it yesterday.
Okay.
I thought, why the Genius Act? And my answer is it was an ingenious approach to find new pockets to stuff U.S. treasuries into at a time when the old pockets, the foreign buyers, have disappeared. And if you think about it, by 2028, this is a really good number, by 2028, you're going to have treasury rollovers coming due of $20 trillion and another $9 trillion of additional deficits that have to be financed. The entire U.S. savings pool is only $5 trillion. Where are you going to put all of these treasuries when the demand is disappearing from foreign central banks? And I always thought the stablecoin, the Genius Act, using stablecoins, which have to be backed by U.S. treasuries or gold, but mostly U.S. treasuries. What a brilliant way to find, if you make stable coins the preferred method of transactions around the world, and they have to have U.S. treasuries, they have to buy U.S. treasuries.
That's right.
I totally agree. And the part that he said about the devaluation is completely feasible because America did that once before in 1933. So what did they do? They first asked every citizen to turn in their gold when gold was priced at $27.60 an ounce. So they made it illegal for Americans to own gold. Suggested they told them to turn it in for dollars. Once they had all the gold they wanted, they devalued the dollar by raising gold to 35 an ounce. So they screwed the American public to the tune of 67%. Why wouldn't they do that again? Stuff as much debt into these stable coins and then devalue it.
Step back and the picture becomes clear. We are living through a slow-motion reset of the global monetary order. Gold is no longer just an inflation hedge or a crisis hedge. It is being pulled back into the machinery of settlement, reserve management, and sovereign competition. That is the essence of Giustra's thesis, and it's one increasingly echoed by policymakers and analysts across the spectrum. The sheer scale of central bank buying cannot be overstated. Year after year, we're seeing record tonnage absorbed by official reserves, with the notable shift that gold now outweighs the dollar in many central bank balance sheets. This is unprecedented in modern times, and it all but guarantees that the long-term floor for gold prices will be far higher than in previous cycles. If demand continues at this pace, and if even partial backing scenarios take hold in places like China, the math that leads to 5-digit gold isn't sensationalism, it's simple arithmetic. On the supply side, constraints remain real. Mining output cannot simply be scaled to match exponential demand, and much of what's produced is already locked up domestically by major producers like China and Russia. Add in repatriation trends, with countries pulling gold from London and New York vaults, and the global market for deliverable ounces becomes even tighter. Investors need to understand that paper contracts don't solve the underlying scarcity of physical metal. For silver investors, the implications are even more explosive. Silver has always been gold's smaller, more volatile cousin. But if gold resumes a monetary role, silver's dual identity as an industrial metal and store of value could trigger outsized moves. With supply already constrained and industrial demand growing, a monetary bid layered on top could create the conditions for a genuine squeeze, something many in the market quietly expect but few price in. For well-informed investors, the path forward is clear. Hold physical, secure your custody, and think strategically about allocation. Blend bullion with selected mining exposure. Be mindful of jurisdictional risk, and prepare for scenarios that could see gold, and by extension silver, revalued by multiples. These are not speculative calls. They are grounded in fiscal arithmetic, geopolitical reality, and structural demand. If you value this type of analysis, make sure to subscribe and share this video. It helps us continue to bring you in-depth discussions on the forces shaping the financial future. Thanks for watching, and stay positioned for what's ahead.